The true face of money. You should know this. The money in your bank account doesn't actually exist. This isn't a metaphor, and it's not a conspiracy theory either. If everyone tried to withdraw their money from banks right now, the system would collapse within a short time. Because that money isn't really there. And this isn't a mistake. The system is designed to work this way. This setup is called fractional reserve banking. It's the power behind global debt, inflation, and the illusion of wealth. Let's go back in time. In the old days, money was gold and silver. The wealthy kept coins and jewels they could trade, but carrying them around was dangerous. So people started entrusting their precious metals to goldsmiths. The goldsmith would give them a receipt. Bring this paper and you'll get your gold. After a while, everyone realized that these receipts were just as valuable as gold. They were lighter, easier to carry, and worked fine in trade. And then, goldsmiths noticed something. Almost nobody came to claim their precious metals. Most of the gold just sat there in the vault. Then they thought, well, if that's the case, what if we issue more receipts than we have gold? They had 1,000 coins in the vault, but they issued 2,000 receipts. They lent out those extra receipts at interest and started making money out of thin air. And nobody noticed, because everyone believed in the receipts. That's how modern banking was born. The rise of banks' time passed. The system grew. In 1694, the Bank of England was founded, not for the people, but for a monarchy drowning in debt. The bank lent the government more money than it actually had, in exchange for interest, and that debt was repaid with the people's taxes. Sound familiar? Because the same thing still happens today. How does it work today? Let's say you deposit $100 into a bank. You think that money is sitting safely in your account, but the bank only keeps a portion of it and lends out the rest. In the past, this reserve ratio was 10%. So if you deposited $100, the bank would keep $10 and lend out $90. That $90 would go to someone else who would deposit it again. And before you know it, your $100 had turned into $900 circulating in the system. The strange part is, most of that money exists only as numbers in the system. And now brace yourself. Since 2020, the reserve ratio in the U.S. has been 0%. That means banks are no longer required to hold any of the money deposited with them. So how is the system controlled now? It's no longer about cash in the vault. It's about banks' capital and liquidity. These rules are set by a group of central bankers who meet in Basel, Switzerland. Not by us, not by the public, not by elected politicians, just by a group of technocrats. Here's how it works. If a bank wants to make a risky $100 loan, it must put aside about $8 of its own equity as a buffer. In other words, banks now create loans first, and deposits come afterward. When you take out a loan, no cash leaves the vault. The bank simply types a few numbers on a computer and new money is created. That's why more than 90% of the money in the system is bank money, money born out of debt. So what does this lead to? There are three major consequences. Inflation. Because the same money is multiplied over and over, each unit becomes less valuable. Perpetual debt. Since money is born as debt, there is always more debt in the system than money to repay it. Concentration of power. Banks earn interest on money they never had. Governments finance wars without raising taxes. Only those who own real assets win. Ordinary people only lose. Why do crises keep happening? The Great Depression of 1929, the housing crisis of 2008, all stem from the same cause: money that doesn't truly exist, too many promises, too little collateral. And every time the solution is the same. Central banks print trillions to keep the system alive, because if the illusion collapses, the economy stops. The same system everywhere in the US, reserves are zero. In Europe, the UK, Canada, and Australia, the same. All of them follow Basel's rules. Countries like China, India, and Brazil still have higher reserve ratios, but even their systems operate within the Basel framework. So wherever you live, what controls money is not gold. It's the rules written in Basel. Here's the truth. The system never wants you to be debt-free. If everyone paid off their debts, the money supply would vanish, the economy would freeze. So the system needs you to borrow, to spend, and to believe. In this game, you're both the fuel and the collateral. So what should we do? Money does not equal wealth. Real wealth is land, knowledge, skills, and independence. Debt is not neutral. This system exists because of debt. And the debt always flows upward. Inflation isn't accidental. It's built into the system. Every year, you have to work hardest, just to stay in the same place. But this doesn't mean the world is ending. It just means you need to be aware. Keeping your money in the bank won't protect you. Real security lies in creating value outside the system. Knowing the truth won't scare you. It will set you free. Because this game continues only as long as you believe in it. And if you understand the system, you can start playing by your own rules.